What's up, everybody? GenExDividendInvestor here. Did you read those powerful quotes in the beginning of this video? Those are actual quotes I made up. 100%, I'm serious. Well, okay, Pierre made them up. Well, most of them. But still, actual quotes. In this video, I'm going to show you two new fun metrics that I've added to my dividend portfolio spreadsheet. And then at the end of this video, I'm going to share a very powerful and touching subscriber email. First, I'd like to say that in the description of this video, I've finally done what some subscribers have been asking for, which is to share some investing books I like. I also shared what my audio recording gear is for you enterprising future YouTube channel creators who asked about that. They are affiliate links. Now, I want to say that part of the reason I made this video was to help people smile and laugh during these challenging times. And most importantly, you will find out that PSR is just a function of yield, so it is critical you listen to what I'm going to say next. Don't chase yield. Don't chase PSR. Don't chase women. Well, at least two of those three statements I made are true. What do I mean by don't chase yield and don't chase PSR? It means that you should not look at a stock's dividend yield or its PSR and then decide that you buy more of it because the yield is really high or because you want to have a higher PSR. So why do people say don't chase yield? It's because people who chase yield often get burned. Think of yield as a hot stove. The higher your yield, the closer you are getting to the stove. Eventually you get burned. Higher yield usually means higher risk, but many newer investors will ignore the risk aspect because they want the quick rush of seeing potentially fast returns. So people get tempted because they see a stock having twice the yield of another stock, so they think they'll make twice the money. But you need to understand why the yield is high and what the risks are before you choose to invest. For example, a crashing stock price means yield goes up, because dividend yield is simply the annual dividends paid out divided by the share price. A high yield should be taken as a warning sign. There may be danger ahead. The higher the yield, the higher the risk of danger. Maybe the yield is high because the company is folding under its debt. A high yield may signal that a company is in poor shape and they're preparing to cut their dividend. So think about that. You are hoping for nice dividends, but you're setting yourself up for failure by going after high yields. Newer investors sometimes chase riskier REITs and MLPs because of their higher yield, but they don't realize that those investments are often more volatile. They might not have sustainable growth. They might not have strong competitive moats. Now, certain sectors and companies have higher yields due to their very nature, so like everything, there is nuance you need to understand. If my kids came to me and said they didn't have the patience or interest to learn those nuances, then I'd tell them to simply invest in VTI or VU. If I had a nickel for each person I've known over the years that chased high yields and got burned rather than focus on quality companies that had lower yields, I would have a lot of nickels. So I want to be crystal clear. I'm showing you a new metric in this video that is a function of yield, but you should not, and I repeat not, simply buy more of a specific stock so you can get a higher PSR on your spreadsheet. That all being said, I find PSR to be a fun metric to track, and for me it seems like it will be a motivating metric to track, but I would not make any investment decisions trying to raise my PSR solely for the sake of raising it. Okay, on to the show. So what is PSR? And who is Pierre? PSR stands for the Pierre Sustainability Ratio. Pierre is a relatively well-known culinary master chef and Johnson & Johnson advocate and investor on my Discord, and he might possibly be the last living relative of Marie Curie. Who was Marie Curie? Oh, she was just the first woman to win a Nobel Prize for her work on radioactivity, the first person and the only woman to win the Nobel twice, and the only person in history to win the Nobel in two different scientific fields, that of chemistry and physics. Why does this matter? It doesn't, but that's neither here nor there. Pierre came up with a concept of a dividend sustainability ratio, which is a ratio that shows how many shares you drip each dividend payout period. He is also the person I am showcasing on my thumbnail, where he's sporting those snazzy shades and is no doubt driving his racing red 2020 Ferrari 812 that he probably bought with his Johnson & Johnson drip, a logo which is also red. Coincidence? Don't be absurd. Thus, Pierre would say that you have achieved a PSR of 1 in a dividend stock when you have invested enough into that company to the point where each dividend payment buys one share of itself. Or to say that in a different way, when your stock drips enough money to buy one full share of itself, then you have achieved what Pierre calls sustainability, i.e. your drip is sustaining its ongoing growth with at least one share dripped per pay period. I liked this idea so much that I added it to my spreadsheet. Now, I don't advocate that anyone should arbitrarily push for a PSR of 1 in each stock they own, but it is fun when your positions are dripping full shares each quarter or each month. Obviously, you should always invest in what aligns to your financial goals rather than simply go for PSRs of 1 or more. And of course, you need to have a decent sized portfolio to be able to achieve a good PSR. Pierre once said that the penultimate goal is the all-elusive PSR of 100. My top PSR is around a 43 with AT&T, so yes, an endgame goal to be sure. Now, much like dividend yield, your PSR changes throughout the trading day because share price changes throughout the trading day. The calculation for PSR is your stock's estimated annual DRIP income divided by the share price times the number of pay periods for your stock, where pay periods are 4 if it's quarterly, 12 if it's monthly, or 2 if it's something which pays out biannually, like Disney normally does. So now let's take a look at my portfolio spreadsheet where I've added 2 new columns. The first new column has the number of shares needed to DRIP 1 full share per pay period. The formula for that is the share price times the number of pay periods divided by the annual dividend. The other new column is the PSR for each stock, which is the number of shares I actually DRIP per pay period. I mentioned the formula for PSR already. So let's look at these metrics in my portfolio. We see that you need around 366 shares of Microsoft to DRIP 1 share per quarter at today's prices. If the prices change, then the number of shares you need to DRIP 1 share per quarter will also change. You need about 232 shares of Realty Income to DRIP 1 share per month. You only need 53 shares of ExxonMobil to DRIP 1 share per quarter. We see that I currently DRIP about 43 shares of AT&T each quarter, which means my PSR for AT&T is 43 and my PSR for Realty Income is 5.48, i.e. I DRIP 5.48 shares of O each month. However, Home Depot, Goldman Sachs, and Disney have PSRs less than 1. I only DRIP 0.6 shares of Home Depot every quarter because I have 94.9 shares, and I would need around 158 shares to be able to DRIP 1 share per quarter. So now that you understand my new metrics, let's move on. Someone asked in my Discord the other day how to add filters to a spreadsheet, so I told them how you could do that. I've removed filters because I've been trying to keep my column width down, but I decided it was more useful to have faster sorting of my spreadsheet than the annoyance factor of fatter columns. So I'll show you how to do that now. Okay, here we are in my spreadsheet, and if you want to add a filter just so you can sort on anything, what you want to do is kind of select your bottom row and go all the way to the top, including the header row, and you want to leave out kind of the rows on the bottom where you're doing sums or weighted averages or whatever, and then you just do data and create a filter, and then everything has a filter at that point. So for example, I'll zoom into this so you can see. So for example, if you wanted to see what had the most shares, you could sort it this way, and then you'd see I have the most shares of AT&T, and then Coke, and the Realty Income, Southern Company, blah blah blah. Or if you wanted to sort on the number of shares needed to DRIP 1 per period, you could do the same thing, sort it that way, and you'd see I need 384 shares of Apple, 366 shares of Microsoft. And then, for example, we could look at annual dividend. Let's see who pays the most annual dividend. And we see that Home Depot pays the most, $6 per share per quarter, and then 3M, and then Goldman Sachs, and then McDonald's. How about if we go to dividend yield? Let's sort it based on that. So we see right now ExxonMobil is at 7.61%, AT&T is at 7.08%, Leggett & Platt 5.62, etc. How about we look at the manual 5-year dividend CAGRs? So here we see Home Depot has a 23.68%, Starbucks is at 22.59%, AbbVie is at 21.75%. Or we could come and look at the portfolio value, and we see Microsoft is the most at 146 grand, and then Apple at 136, J&J at 127, Pepsi at 101, etc. Sort of based on annual passive income. We see that AT&T drips a little over $5,000 a year, Duke at 39.86, and then Realty Income at 35.51. And if we want to sort this based on the PSR, we see AT&T is around 43 shares that are dripped per quarter, and then ExxonMobil at 16, Coke at 14 shares per quarter, and kind of go down from there. ODRIP's 5.48 shares per month, kind of etc. And then if you want to remove your filter, you can just come data and turn off filter, and it kind of goes back. So again, we'll just highlight it and add the filter in. And then I can sort it by the highest percentages. So that's also the same as sorting it by the portfolio value. There we go. Okay, now I want to thank some new people who signed up on my Patreon page. Then I'll share a touching message from a subscriber. First, I want to call out the people who boosted my Discord server. So thank yous go out to 2K Liam, Men8V, Austin Metheny, and Yogru. Now onto my Patreons. Normally I just call out the King tier members, but I really appreciate the first people who are signing up, so I want to include them as well. I have 3 tiers in Patreon, with Champion being the first one, and then Aristocrat being the next higher one, and King tier being the highest. So I first want to thank Tutor FG, who signed up at the Aristocrat tier. Tutor left me a nice note. He said, "Hey GenX, Tutor FG here. Thanks for all the info and help. It's really changed my outlook on investing for my future and not being a panic seller. Keep up the great work." Thanks, Tutor FG. Like Warren Buffett said in his recent annual shareholders meeting, no one can predict what will happen tomorrow, or next week, or next month, or next year. But I'm confident enough in strong quality businesses that even if we fall 75% tomorrow, I bet you within the next few decades they will recover and go much higher than they are today. The only question will be if people have the stomach to stay the course when things look bleak. It's been super fun hanging out with Tutor in a private channel I created on my Discord server, where I've been sharing thumbnails of my future videos with him, and he's helping influence what videos I work on next. I'll be posting my videos in there so he can watch and comment on them before I release them live to everyone else, which is one of the perks of having access to that private Discord channel. I also want to thank a bunch of my Champion tier supporters. So thank yous go out first to Ryan Giffen, who is a channel creator and who was the person in my Discord who originally suggested I do a Patreon. Ryan is a really cool guy and is an entrepreneur and runs a great investing channel, and just started a new channel called The Ice Guys, where they specialize in everything to do with commercial ice machines. His wife Jessica Giffen is also a YouTuber and has a rather large channel at over 33,000 subs that is about motherhood and decorating and such. So they are husband and wife YouTubers and business owners. How cool is that? Next thank you goes out to Useful Random Investing, a newer investing channel creator who is in the UK. He has done a cool spreadsheet video recently using an API I hadn't heard of before. I'll put links to his channel and all creators in my description below. Then I want to say thanks to Joe S, LOLBoy007, Andre S, Sky, Dividend Driver James, Captain O, and GW Life TV, who is a channel creator that is starting to specialize in ETFs. So if you dig ETFs, or even if you don't, check out his channel. Then we have Itzik, who left me a nice note, who said, "Hey man, I think I told you after many years I finally got into investing thanks to you, so your impact on my life is kind of big. I enjoy the content and other things you created. Great job and thank you, Itzik." Thanks, Itzik. That's very nice of you. Finally, I want to thank Mikaru, aka Nora. Hers was the touching subscriber email I mentioned in the beginning of this video. She said, "I just joined your Patreon page. You're so transparent, open, and willing to share so much private information and knowledge. I appreciate your channel so much. I started investing in 2010 as a hobby, but my investing went to the next level after my boyfriend passed away in 2015, and he left me his stocks. I want to protect his legacy, and I started studying more than ever. I never imagined I would end up managing my own Roth IRA and traditional IRA, but I did it. I still consider myself a beginner, but I'm not afraid, and I feel more and more empowered every week. Your content has been extremely helpful in many ways I can't fully express to you. All I can do is support your channel and send you this little note to say thank you. You're a great teacher. You inspire me to keep studying and investing in this crazy volatility. I look forward to chatting on Discord once I figure it out. Nora." Well, first I want to say thank you for those kind words, Nora. And I'm sorry for what happened. But he sounds like an incredible guy to have done that for you, and I think it's beyond cool that you're working so hard to learn about investing to protect his legacy as well as to better your financial future. So kudos to you. You're awesome, and I'm confident that right now he's positively beaming in pride at what you're doing in his name. Okay, I'm going to close with this. I've realized that with over 6,000 subs, I no longer have the time to track which subscribers have commented on my last 3 videos and then add them to my scrolling ticker. So I'll have to stop that, but I'll still commit to continue to respond to every comment. Thanks. I really appreciate everyone who's supporting me to educate, inspire, and entertain others in their financial dividend investing journeys. Please subscribe, like this video, check out my new Patreon page as I think it's pretty spiffy, and I'll chat with you again real soon. Remember, I'm not a financial advisor, and these videos are for entertainment, inspiration, and educational purposes only. Investing of any kind involves risk. I'm only sharing my opinion with no guarantee of gains or losses on investments. Don't use this information without double checking it and talking to someone a lot smarter than me after you completely understand it. So I'll see you in the next video, and remember to stay positive, patient, play for the long term, keep investing in great companies, budget reasonably, and win. I know you can do it. Just like I know you can hit the subscribe, like, and bell icons, share this video with others, and comment below.